Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, boys and girls, I hope the gardeners don't bother you this morning. They're only here Monday, Wednesday, and Friday. That's how big this place is. Anyway, it's a very nice place. I'm being treated as a guest, which is nice. I want to show you what happened in the metals markets last night, folks, because I was following this along the way. This is a silver market. I did both gold and silver, but I wanted to focus on silver because it was absolutely perfect with the things that I like to look at. You can notice here, this is silver on a 4-minute chart. You can see over here in the far left, there November 18th, Tuesday morning, or Tuesday night. Here, this is Wednesday, I think, isn't it? Yeah, and Stan Harley will be our guest today. Anyway, you can see what's happening today. What I did was, after I started to watch this, I made a chart of silver so that I could follow it just using the fib numbers. So there's where we were. Okay, there was your first 382 retracement ABCD for folks. You see that right there? See how nice that was? What did we do again? We hit another one here. We hit another one here. Look at this. 1, 2, 3, 4. And where'd we go to? Believe it or not, up $15,000 in one day, folks. That's not much because, well, that's pretty much what gold did. So that's why I was watching this. I'm keeping score of these because I found each one of these, you see the little ABCD here, the little ABCD here. You might think that's, not very much, but it's important when you see it happen over and over again. The thing that is when it works. My God, look at the risk reward on you have on this thing. It's just totally out of sight. Okay, very, very important. Okay, the next one we're going to take a look at over here as I want to get over here. This was one that was really quite exciting. I have to go through it this morning, folks, because this is what we were watching here in the gold market with the AI program this morning. As you can see, Teresa and I watched this, and you'll see this has completed the ABCD up here at roughly 11:30, and so it was a really nice move so far. And then later on, we'll get up here and I'll show you what happened. And there's where it came to. You can see there was the high here. You don't know which one of these two's highs, but when the pattern completes here, you have to assume that this is the right high. There is a small high here, but not very much. Now we've come all the way down to 04, and now we just rallied back to 84. That's that number we were just looking at on the 382 pattern. Whether it stops or not, I don't know. All I know is we went from we dropped $80, folks. We went up $80, came down $80. That's $160 an ounce, $16,000, and that's a lot of money in anybody's. Now let's go back to the stock market. Okay, here's where we are with the Russell. All right, there was the high. There was our trade right there. There was the 12th. There was the 382 retracement. We had another one right there. We had another one right there. I didn't draw it in, but there it is. And look at today's high, folks. Today's high in the Russell was exactly 382 of the high back there 5 days ago on the 12th, which was that big Bradley date. So right now we're down a little bit, but not anywhere near taking out the lows here like we've done here in the Dow Jones. The Dow Jones is the only one that has taken out the lows during that time. Okay, now the next thing we want to get up here and make sure I don't miss anything on the little programo here. So hold on one second. We got to do these one at a time. So far, the number's been okay, 84 here in the gold. So if you did it at 84, put a buy stop at 94, and we'll see that right now. Now, if you remember yesterday, we were talking about soybeans. I just wanted to show you this is, let me get the soybean chart up here so that we can all see it together. Hold on a second. Get that hourly chart. because there's where we were yesterday. As you can see here, we came spot on to those numbers. 1169. The high was 1169.5. That was the larger one of the two patterns. Okay, and remember that Shane Smolian was telling us that guess what? There was a really big Mercury program coming in here today, and there it is. Bada bing, bada boom, and now you see we're starting to move a little lower here this morning. We should go to at least the same as this. In fact, we're there right about now. It should hold right here if it's going to be any good or not, or if this is a bigger high, this will start to move down a little bit harder to the downside. Okay, now let's get over here and talk a tiny bit here about the crude oil. So let me get over here about the crude oil, and we're going to see if that's going to do anything, because it has had virtually no rally here, folks. You can see the rally today was only a 382 off of that high right there. We had the big move down, and boy, that's a big surprise on that one. You can see it stopped right there, and as it started to back off. So a little bearishness coming into the crude oil market, which was not unexpected because we had those big numbers up here. If you remember yesterday and the day before up there, in fact, there were two of them. If you remember, there they are. There was the first one, there was the second one, and now we're starting to move lower, which is it stopped right at the 786 here today. So that could be a good thing to look at, but we don't really know whether that's going to be a good thing happening here or not. Okay. Let's move on here and cover. Okay, here let's just do the Dow Jones here. See where we are. Because see, we're still bouncing off that. See, we rallied 100 each time we come. We 150 points off the bottom. So if somebody's trying, well, I don't know who somebody is, but people are buying against this major support here, because this is the one that is held. The Russell has held above it. The Dow Jones has held it. The NASDAQ has certainly held it. So those are the ones that you got to pay close attention to. Now, here's your first danger sign right now, folks, because we just went $1 higher than our 1080 or 484. So your stop's got to be in the gold at 40.94. 40.94. Don't risk more than $10. It's an ABCD pattern, and like I say, sometimes they work, sometimes they don't. Now let's tell you the story about the gift that just keeps on giving, folks, and that's the short euro. This thing has just been going down. Well, there was the key day. Remember the 13th, 12th, 13th. That was the key day right up in here. And you can see we had a little move in here every single day now. It's just been going lower and lower and lower. Clean this out just a tiny little bit here, and you'll see so many 382s in here that they're just everywhere, folks. Just draw the first one in right here. There's your first one right there. Then you make another new low right there. There's another one right there. Then you make another new low right there. There's that one, okay? And then we start coming down. Now what we know now is, because this being well, it didn't draw it exactly because it's off by just a hair, but it is correct. I know that for a fact. There it is. And there it is right there on the money. That was yesterday. Here was today's action. You can see we had a little bit of a rally last night and then down, down, down. But what we've done now, given the fact that we've come down this much, is we've completed a pattern. And you can see I'm pointing to the machine. Are you kidding me? You can see we're below the ABCD, which is a sign that we're probably getting ready to go lower. And that's why we're watching it so doggone closely. All right. Very, very important that we do that. All righty. Now let's get over here and see where we are. Hold on. We'll be right back here. I think we're taking a break right now. I believe so. We'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Hey folks, this is Treasury bonds. There was the high we had on the key date there. That's with the Bradley date. Now, all I'm going to do now, this is the second most heavily traded of the indices of the things in the bonds. Are notes are first, bonds are second. S&P, I don't know if it's changed or not over the years. But there's the big point right here. I just want to show you the value of ABCD. Those of you that have not seen it before, there's your AB leg right there. There's your CD leg right there. You can see it comes in very, very shortly. Now, each day it makes, but within a day or two, it makes the same pattern over and over again. You can see the next day between the 16th and the 18th, what we do, we had an ABCD taking you right up to this level right here. Okay, and what do we do now? We did the same thing now. We got another ABCD forming here this morning. Now, I had someone very, very close to me who lived there in Tucson for many years, and this is what he did every single day, was just do these hourlies. Now, he worked with bond traders, so he was really familiar, with the reports and all that stuff. But he basically looked for ABCDs, and he relied on them because they work about 60% of the time. And the fact is that they're so doggone accurate with the numbers that's really what you're looking at. What Mark used to do, he used to watch that first hour of trading in the day, folks. Now, here we are quite a bit early, so let's just go down to that first hour, and I'll show you what I mean. Okay, there's your first hour. See this when the stock market opens and stuff? Those were the times that he was looking for these real wide swinging moves. This is every day it's like this, folks. Those are new orders coming in, and they just bang it around, and that's what they're trying to do as they walk through these and try to figure these doggone things out. All right, let's take a look at a couple of charts. Guess what we got today, folks? We got NVIDIA's earnings, and the whole world is banking on NVIDIA to have great earnings. And I hope they do, because if they don't, they are not going to be well liked. And I don't think it makes much difference, but here's we are. Holy moly, guacamole. Wow, we were up quite a bit, and then we backed off here today. Let's see if that has any ABCD here in NVIDIA. Whoa, by golly, look at this. There's one right there, A, B, C, D. Two teaching things here. You've got your A, B leg right there, your CD leg right there, and the reason why that it doesn't fit is because of this little puppy here known as the gap. What you have to do is you got to come over here and connect this out to 1.27, and you'll see that you'll be just about spot on when you do that. And there it is, spot on right there at 87 and down here. It's still very bullish. You see we got higher bottoms in here. It sold off so far this morning, but it's holding right in here, and that's still an uptrend. That's a nice one. This is short, but it's short term, but it's still a 135 pattern. That's it right there. So you bought it at 83, you made it at 85. It's nothing exciting about that, but that's how it works. I'm anxious to hear what our good friend Stan Harley has to say about these markets. He's done a great job talking to us about the high on November the 12th. And boy, that was definitely a high, folks. We know that for a fact. Okay, let's get this out of the way here and see where we are. Well, we're about a couple bucks, $3 under, it's 84. Yeah, $3 under on our gold trade. But remember, the stop has got to be at 94. We sold at 84, got to be out of it at 94. All right, that's it. So we'll keep a close eye on that right now. And then here is our, here's the Dow Jones. Let's see where the Dow Jones is right now based on this morning. There it is. Now we see we've hit it yesterday and today, the same one. This is why this is so important. See this right here? This is so important because if it fails, nasty. You got to be really careful. See right over here. You see that the Nasdaq held the lows. Okay, Stop and P. They also stopped it. Hold on a second here. It also held the lows. All right, and that's it. Well, the S&P this morning. You'll see what a beautiful pattern it had on all the numbers. These things change colors. Okay. I'll draw the pattern in so you can see it a little better because it was really quite nice. It went right up to that number at 03. Let's try that again. The number, you can see, this measured to 07. It got to 06, and then we had to move down. That stopped right at the 786 on the way down. That's why we're rallying back. And our rallying back number here that we're watching is already above the 382 or very, very close to it. It's already above it. So far, this still looks quite bullish. This is early, folks. It's 1:30 in New York with a 4 o'clock closing. If we close badly today, that is what's going to make the market move. And boy, because you've got that report coming out, and the whole world, can you imagine the whole world, poor Jensen Huang, he's worth $1 trillion, but what happens if he has to report that something's, I just don't have enough chips to sell because the demand is too great? That puts a guy between a rock and a hard place. Now, his rock happens to be a 44-karat diamond, but that's what he has to deal with. Next stock to look at is Tesla. We always like Tesla. Rode in one yesterday, folks. Can't trust a car that you can't hear, but still a nice car. Two things I want to cover right here are Tesla and also Google, because the Buffett company has bought into Google. Whoever the guy was, it wasn't Warren Buffett because he's turned all this stuff over to somebody else. Well, there's nothing going on here today. You can see there's very little. See the 19, it's down a little bit today, not very much. Now, it's had some of these stocks have gotten hit really bad, folks. We already know that by looking at the Dow Jones and all the other stuff that's going on there. So we got to be really careful to put your stops in on some of these things because, the problem is the margin debt that's out there. This is just the beginning, folks. There's no panic here. We're down 3% in a week, nothing. We're down, 1,200 points in the Dow in 5 days. Nothing, right? Well, nothing turns to something when these things fail. And that's why you're looking at this battle that's going on in the Dow Jones down here at 4,600. Because if we start getting below that, then you'll see that there's going to be some margin selling. That's the way it's always been in the past, but this year, maybe it's going to be different, and I don't know if that's going to be the case or not. One last stock, and that is, let's get it up. Someone asked me a question about United Airlines. I haven't seen an airline stock, and, well, they're not doing too well, are they? Son of a gun, I didn't realize. Well, there's not many people flying anymore, I guess, so let's take a look at it. Well, we've had a breakdown here, all we've done so far. Well, you can see there's a stock for ABCD. A, B, C, D. A, B, C, D. A, B, C, D, A, B, C, D, A, B, C, D. What's so hard about this, folks? There it is, where you put the lines on it and line it up. The problem is, you see, they don't line up perfectly because they're so sensitive to these numbers. What you have to do is you got to go up and change the number. I don't have time to do it because we got a break coming up. We got Stan, and we want to hear the man talking because he's always got some great stuff to get us moving in the right direction. Okay, so that's what we're watching here. Let's double check here the old clock on the wall, and I'll check and see how we're doing. And hold on 1 minute, and we'll see where we are.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstaddt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hey, we're back, folks, with Stan Hartley, I hope. Are we here, Stan?
Doing awesome here in Virginia.
Oh, we're looking good, Billy Ray. Good game is on, my friend. Please start with all the stuff you got for us today, buddy.
Absolutely.
And thanks for joining us, Stan. I know it's a spur of the moment, but I get so many requests for you that I have to share them with you. So please tell the folks what you're looking at.
Absolutely, my pleasure. We had some problems in the past, but I think we may have gotten all those worked out. I thought I would just take a brief moment and talk about market cycles, because that's the manner in which I use to analyze the markets, and I talk about them on the air here with you. So when we talk about market cycles, it's important that we understand what is the best measure of central tendency of the data that we're analyzing. And there are essentially for the most part, four methods for assessing measures of central tendency. What's the descriptive measure of central tendency? We can use Fourier analysis, which is what a lot of cycles programs utilize. We can do regression analysis, which I do a lot of. We can do the average or the mean, which most people are familiar with. And then the fourth is called the median, which you often hear on television, and I'm not sure a lot of people do it, but I actually believe the mean is the best measure of central tendency for a data series, and I'm going to show you why I believe that. Let's take a look at the stock market. Here is a weekly chart going back to about 2015, 2016, about 10 years. And what I've done here, Larry, is I have marked all of the major lows with the purple vertical lines, and these mark the major lows on the weekly chart. And as you can see there, we have been through a somewhat variable pattern. We've been making lows, as it turns out, about every 33 weeks. That's just a skosh under 8 months. And what I've done is I've put all of these lows into a spreadsheet and computed the median, not the mean, but the median. Okay. And I found the median interval.
Yes. Stan, could you repost the chart, because it's not coming up? Okay. All it's showing is your introductory thing. We need to, if you'll show the chart up, they're saying it's not popping up. Unfortunately, I go through this every day, but try it another.
Well, let's
try posting it again.
Interesting. Let's try that again. Okay. All right. Let's see if this helps.
Now, let me know in just a second, and we'll see if we can take a look at it.
I've got a chart of the S&P 500, a weekly chart going back 10 years on the screen right now.
I see your lovely picture, but I don't see the chart. I see, there's an insert there, but it doesn't pop up. I wonder why. Oh, well.
That is just...
When I do this each day, Stan, I always think of my old grandpa used to say, it's like watching two monkeys washing a coconut, because I get so stuck with... I got a brand new monitor over here, microphones, because, and they gave me the wrong plug. I got to buy a thing called a USB-A versus a USB-C. Like, well, I should know what that is.
Well, I tried a different window. Let's see if that helps. What I'm showing is a weekly chart of the S&P 500.
There you go.
Going back
Billy Ray is back in town. We're ready. Thank you.
Do we have the chart on the screen? You do have the chart. Is that clear?
Yep. Best measure of central tendency is the mean.
Great. Thank you. I have a monitor on my screen, but there's a delay of about 10 seconds. I do see it. Okay. Well, as I was saying, what I've done here is I've marked all of the major lows on the weekly chart going back 10 years, and I've put those dates into a spreadsheet, and I computed the median. The median is 33 weeks. That's about just under 8 months. If you take the low that we had in the series, which occurred on April the 7th of 2025, and you add 33 weeks, you get the last week in November. So that says if the cycle doesn't move around too much, the last week in November, and we're almost there, should mark a low in this cycle. And indeed, we've been coming down, as you know. We topped out in the popular averages last month, some earlier in the month, some later in the month, but we're coming down very predictably. And I think we are going to bottom next week, pretty much right on schedule. Marking your next garden variety 33-week primary cycle low. And I'm looking forward on the 24th to the 6th, with the 25th being the centroid of my analysis.
Okay.
Here is a chart of the weekly measures of price velocity. And what I've done here is I've looked back 7 weeks, 14 weeks, and 27 weeks, and essentially done a speedometer check of those time periods. And I look back and I calculate the difference in price and then divide by either 7, 14, or 27, plot all three on the same screen. The reason I do all three is because for an indicator to work, any kind of indicator, whether it's price range or price velocity, it has to be based, if it's going to be accurate, on the cycle that's then underway. But cycles, even the 33-week cycle, they move around a little bit. So how do you account for that? Well, you have to do computations across different time frames. That's the only way I know to deal with that problem. And then plot all three of them on the same screen, which is what I do. Anyway, as you can see, all three are heading south. The trend is down. This is a daily chart going back a couple of years. And at the top, you can see I've marked all of the major lows with purple vertical lines and put those into a spreadsheet. And I found that they align very neatly with the major Fibonacci ratios of 0.236, 0.382, 0.691, and so forth. And when I put those dates into the spreadsheet and I do the analysis, it tells me to look for the next turning point in this data series between 24 to 26 November. So approximately 25, 26 November, 24, 25, 26 November. That's next week. We're almost there. So I think prices are going to head south, and I think we're going to hit a cycle low next week. I think it's probably going to be a V bottom, meaning we're going to pull that down into it, and then we're going to turn around and we're going to reverse so fast. If you're not quick, you'll miss it. And I hear the music. We'll pick up the rest on the other side.
Okay, Stan Harley, be right back, folks. Stay with us.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hey, we're back, folks, speaking with Stan Harley. Please continue, Stan.
Larry, I wanted to point out one additional item on this chart that we were just looking at of the S&P 500 going back a couple of years. When we see the initial weekly cycle off a major monthly cycle bottom, like we saw here on April the 7th of this year, the first 33-week cycle out of that is very often associated with what I call extreme right translation. I wrote that over here. What does that mean? Mm-hmm. Here is the midpoint of the cycle, and normally in a bull market environment, the crest or the high point in price occurs to the right of the midpoint. That's called right translation, and that's characteristic of a bull market environment. If we are in a declining environment, like which we were over here, here's the middle of the cycle, of this trading cycle, and notice price peaked to the left of the midpoint of that. That's called left translation. That's characteristic of a declining or a bear market environment. We're not in that anymore. We're in a bull market. But what is often the case in this initial weekly cycle is we tend to get what I call extreme right translation. What does that mean? It means the crest or the high point occurs very far to the right of the cycle. And in this case, the S&P topped on October 29th, then Dow Industrials topped on November 12th. And so we're going to get a short but sharp drawdown into the cycle low. So the low doesn't change, but because the highs were so scrunched so far to the right, you get this short but sharp drawdown. And I call that extreme right translation. And that's very, very common in the initial weekly cycle after a primary monthly bottom.
Stan, I got a question for you. Was it Hurst that talked about right translation, or was it Walt Bressert?
My first exposure to that was Walter Bressert.
He wrote about it. One of the reasons I moved to Tucson because of Walt. That's good enough. But I don't think it was in the Hurst book. Yeah, Jim Hurst was my customer. He did two two stock trades in the 4 years that he was with me. He just didn't like trading. He liked fishing. But he's a nice guy. He did a lot of good work. It was a very popular book. So please continue.
Yeah, other than you make a good point, and I'm glad you asked. To my knowledge, no one other than Walt Brezert brought up this notion of right and left translation. And I knew him well, as you did. A good man. We did talks together, and I had a few dinners with his family, and know his son Jerome. Good peep all around. Good man, and I think in his lifetime he was underappreciated for the knowledge that he brought to this field of technical analysis and cycles.
I have to agree with you on that. That's for sure.
He left us way too soon. Here is a daily chart of the S&P 500, and this is something very interesting. We tend to make lows on the daily chart about every 17 trading days, plus or minus a couple. And very often, cycles that produce lows have their genesis point or their beginning point is a high, which might seem a little odd, but after you've looked at enough of these, you'll see it happens a lot, and it's all too common. So here at the time was the all-time high back on February the 19th of this year, and that's where the cycle sprang forth. So 17 trading days later, we made this low, then this low, then this one, then this one, this one, this one, and so on. And I think the next low in the series is going to occur right around November 25th. That's next week.
Sure is.
I could be wrong. But
well, like I always say,
if I'm wrong, I'm going to say Larry
Pesavento.
Never in doubt. For sure. But seriously, you and I, all of us as market technicians, we look at all of this data and we put our lens on, our glasses on, technical analysis and cycles and indicators, and we make our very, very best judgment call at that moment. Now, tomorrow, new data may come in to change that, or maybe we look at old data with a fresh set of eyes. But that's what you and I as data scientists and market technicians do. And we put our views out there, and sometimes they're right and sometimes they're not right. But that's the best I see at this moment in time. I'm looking for an important cycle, probably a V bottom early next week, and I think the stock market rockets higher next year, and I think we're going to have a tremendous rally into next year. I think it's going to surprise a lot of people.
Well, it surprised me so far, so I'm always ready for it.
We're not at a secular market peak yet. I have some ideas on when I think that will occur, but we're not there yet. It's still a secular bull market. Let's change gears here before the music comes on. Talk a little bit about Bitcoin. That's in the news a lot lately. Here's a chart updated that I've showed with you on the air on many occasions. This is a log chart, not an arithmetic, but a log chart. Just makes it a little bit easier to read, going back to the very first day of trading in Bitcoin in 2010, in July of that year. And what I've noticed, several things. Number one, the major tops that I've highlighted here with these purple vertical lines can be defined by the Lucas series of numbers. In this case, the Lucas number 29 defined the first pair of tops, and the next number in the series, the Lucas number 47, defined the next three peaks in Bitcoin. And it's been quite regular in its recurring pattern. 47 months is approximately 4 years. 48 months would be exactly 4 years. Basically, you could call this a 4-year cycle. The tops tend to be very regular. They tend to be spike tops, and you tend to see rounded bottoms. So I would say, from my perspective, tops in Bitcoin are a little bit easier, not easy, but easier to forecast than bottoms. Bottoms in Bitcoin tend to be rounded affairs. This pattern is just the opposite of what the stock market does. The stock market tends to make rounded tops and spike bottoms, which means the bottoms are more easier to forecast in the stock market than are the tops. But in Bitcoin, just the opposite: spiked tops, rounded bottoms. And the last 4-year cycle peak occurred in November of 2021. If you add 47 months to November 2021, you get October 2025. And we topped on October the 6th, 2025. And now we're heading south. The other thing to notice is notice how each of these cycle tops has seen price move above a base power of 10. So this top here saw Bitcoin move 10, above 10. Here's the music. We'll pick it up on the other side.
We sure will. Stay tuned, folks. Stan Harley, the Harley Stock Market Letter.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, with Stan Harley, the Harley Stock Market Letter. Please continue, my friend.
So, Larry, talking about Bitcoin. One thing I've noticed is each of these major cycle peaks, these primary monthly cycle peaks, every time price has gone above the base power of 10 and pulled back below it. We did that here. We got above 10, pulled back below it. At the next peak, we got just a skosh above 1,000, then fell. The next run here, in December of 2017. We saw price get above 10,000, then fell back below it. The next run, which topped in November of 2021, didn't quite make it to the next base power of 10. We kind of stumbled along, but most recently on October the 6th, we got up to about 125,000. In other words, above the base power of 10 of 100,000, and we're back below it. And just checking the screen, I see right now as we speak, Bitcoin's about 89,000. So pretty much following the historical pattern, gets above that base power 10 and then back below. The next thing is to look at the declines from these highs down in the lows. The low is typically not a V bottom. It's rounded, as I said earlier, and most of the declines have taken about a year to a year and a half. So we're only 1 month off top. So anybody expecting the next major bull run to commence immediately, I think needs to take a look at some charts, because I don't believe that's going to happen. I would expect 1 to 1.5 years of bear market of Bitcoin here before the next move up begins.
Boy, it's good stuff. Stan, thanks for joining us, buddy. We'll have you on again soon. It's a Harley stock market letter, folks. Just Google it, and he'll send you a chart. Thanks again, Stan.
My pleasure.
Steve Rhodes